Hello and welcome to Startup Central. I'm Shibani Gharat. Now, we are putting the spotlight today on Snabbit, the quick services startup that's aiming to redefine how urban India assesses house help, promising assistance within minutes. Now, here is what's turning heads. Snabbit has just raised a $56 million at a time when startup funding clearly slowed and check sizes across the ecosystem have been shrinking. Yet, this company seems to have bucked the trend and attracted strong investor interest. So what's driving that confidence? And more importantly, how does Snabbit plan to deploy this fresh capital to scale its model? My colleague Sumita caught up with the founder Ayush Agarwal to talk about the fundraise, the roadmap ahead, and what's next for the quick services space.
Thanks very much, Ayush, for taking the time out and speaking to us here on Startup Central. First things first, let's talk about the 56 million investments, the quantum of fundraise that Snabbit has managed. How do you plan to deploy this capital, and where does this take the valuation of your company?
Yeah, I think we've raised 55 million in 2025 across 3 rounds. Our last round, as you said, was roughly around $30 million. The current Series D is a 56 million round, which is being led by SIG and as well as Mire, with participation from one of our internal investors, Bertelsmann, as well as Lightspeed and Nexus. Very excited about this milestone and on the way forward for this category and for us. So, firstly, I think, this is a very competitive category, and we're basically leading the largest consumer tech revolution that's happening right now. So, strong balance sheet is extremely critical for us. As you must be aware, we're competing with a listed company as well. So, I think just having a very, very strong balance sheet actually allows us to think more long term and focus on just long-term company building. So that's definitely one key aspect of this fundraise. Apart from that, we're currently live in roughly around 140 micro markets, which we would want to expand further. And I think that's a very important use of the capital that we're raising. And the third one is that we're currently operating one category, which is the core category, which is that of house help. But the entire services, high-frequency services category is completely undisrupted and ripe for tech-led disruption, which is also something we'd want to start focusing on now that we've raised this capital.
You know, Ayush, since you're speaking of expansion in terms of your services, how many more such micro markets do you plan to expand into? Because your focus has been to venture into micro markets.
So we're live in 5 cities. We're live in Delhi, NCR, Mumbai, Bangalore, as well as Pune and Hyderabad. However, not the entire city has been covered, and we basically want to increase our penetration within these cities, launch more micro markets within these cities before looking at other cities. And I think there's at least 500 pin codes that we can target across the top 10 cities in this country.
So all that you're planning with the fundraise, there have been several other fundraisers in the past as well. Where does that take the valuation of your company?
So I can tell you that, our last, we've actually, over the last, we're roughly around an 18-month-old company. And in the process, this is our 5th institutional fundraise. Last fundraise was in October 2025. So it's barely been 5 months. And our valuations increased by more than 2x in the process. So I think that talks about the progress that we've made in the business. That talks about the leadership that we've established within the category in micro markets that we operate in, and also talks about the massive potential that it holds for what this could eventually end up becoming.
Well, potential, that's an interesting word, Ayush. And since we're speaking of potential, with potential comes competition. And competition in the industry is picking up because you have an urban company, you have Pronto and several other regional players that are becoming investors' favorites. So how will you ensure that your services and your company remains a sharp differentiator in this very, very crowded and very, very competitive space?
So I think, in 2024, back when Snabbit started, this was a very contrarian thought process. that the biggest problem of every Indian household can be digitized and served on a platter in a very convenient way. And I think we've made meaningful progress in getting this to a point where there is so much activity going on, whether it's capital, whether it's just like new upstarts, or whether it's like large incumbents coming in. So I think everything that we kept talking about for the last 15 months is sort of playing out. In terms of a key differentiator, I think as category creators in this particular domain, we have very in-depth understanding of what it takes to scale this business beyond just like few thousand orders. We think that the real potential is to do more than 1 million jobs a day at some point in time.
Okay.
I think that this is eventually going to be about execution, and we're laser focused on making sure that we execute to the best of our ability, and continue to stay ahead. Something that we've managed over the months, despite all the increasing competition.
Billion jobs a day, that's an interesting target that you have set for yourself, and I'm sure that it's not going to be very far away. But let's talk about the financials of the company, because your services are priced at 150 rupees per hour with an average ticket size of 240 rupees. So how do you plan to scale that up, and what daily order volumes or contribution margins would make unit economics truly compelling for this business model to become profitable?
Yeah, so I think, see, firstly, it's very important to differentiate between a platform like quick commerce and like services. Services marketplace is a very capital efficient, negative working capital business, as opposed to quick commerce, which has a very robust supply chain that powers those deliveries. For us, it's more about matching demand and supply, and I think we actually operate one of the leanest and the most efficient P&L statements in consumer internet category for the stage of the category building process that we're currently in. And as you said, as you rightly pointed out, we roughly charge 150 rupees per hour from our customers. This obviously, there's a range which could go up much higher as well, depending on demand fluctuations. But eventually, we don't think that we do think that the unit economics is going to be a function less of higher pricing on the consumer end, but more on just like supply chain capabilities that are built at our end, whether it is in the form of higher utilization, whether it's in the form of a lot of tech-led disruption in the supply chain. And I think that that's where we're focused on. So for example, over the last 6 months, we've actually cut our burn per order by more than 50%. So we've halved our burn while growing 10x. And the way we've been able to do it is that the same micro markets which were doing roughly 200 to 300 jobs a day, those mature micro markets are now beginning to do more than 1,000 jobs a day for us. And that increased depth actually improves the economics. So I think the way to get a business like ours into to profitability is more on the side of structural cost-led and efficiencies, as opposed to consumer-led pricing, which is something that we'd want to hold as consistently as possible.
All right, so micro markets, you've spoken about that earlier as well, and micro markets is going to be the key to unlock profitability. But by when do you plan to become profitable? And is a potential listing something that you'll be looking at, something that you have your eyes on?
So I think, see, the way to look at this business is like when we allocate capital, we want to understand where are we really allocating capital. So today, where the consolidated P&L is obviously not making profits, but if you look like a level deeper, it's basically because for every one mature micro market, I have 7 new micro markets. And these new micro markets, obviously, we need to make investments to make sure that we're growing and feeding these micro markets. Now, when that equation topples over, so for every 7 micro markets, you have 1 new micro market, I think that's when the overall P&L will start taking shape. But what's going to happen much sooner than that, and probably this quarter itself, is that our mature markets will start becoming profitable. And I think that's the journey we've been on. So for us, Mumbai, Delhi, Bengaluru are cities, and we look at we break down these cities into specific pin codes and residential neighborhoods. And as I said, micro markets which are more than 6 months old will very soon in this quarter we'll start seeing signs of the most earliest micro markets turning profitable.
Okay. All right, then. So the next few months are going to be very important to track. But what about an IPO then? India's capital markets have attracted immense interest by startup companies, by new age companies. Do you feel the pressure to list since some of your competitors are already listed? Or is there enough window that you're going to be taking before you get listed?
So I think, see, we're still in the category building phase, and I think the true opportunity of this category is something that like we're at the dawn of this category revolution, and it's like it's still 3 a.m. So there's a lot that needs to be built, and I think we're given this capital, we have a lot more headroom to continue building before we actually think of like listing the business.
Okay, then there's enough opportunity that you say as far as building in the home services ecosystem is concerned. But one final question, and this is something about your journey. You started off in 2024 after leaving your job at Zepto, but did the idea of starting a company for house help come from a personal experience, or did something happen at Zepto? Were there any discussions that you would do with your colleagues? How did the idea come about?
So I think this idea was at the cross section of my understanding of consumer while being in my last company, as well as being a bachelor who actually suffered or dealt with the problem of having inconsistent home health through a few months and years. And I think both of these had an interesting cross section where I saw an opportunity and went after it. And I think all the work that I did in my last organization has a huge role to play in terms of being able to understand how hyperlocal commerce operates, in terms of understanding what the urban consumer is really looking for. And some of the key design choices, I would say that, were continued inspirations from the work I'd done in the past.
Well, it is time for us to slip into a very short break on Startup Central. You don't go anywhere. We'll be right back.